Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out if companies are really telling us the whole story. And today we've got a report from Public Storage that has got some interesting notes to sing about. Literally, we're diving deep into a recent filing that details some big financial moves. And trust me, it is not just about storage units. We'll untangle what these financial obligations mean for the company's future, so stick around. And hey, if you like this kind of breakdown, make sure you're subscribed. We also have a fantastic Discord community where we unpack these things further. Link in the description below. So, Public Storage, or rather a subsidiary of theirs called Public Storage Operating Company, or SOC, has been busy. They've just wrapped up a big offering of notes, which is essentially a fancy way of saying they borrowed a whole lot of money. We were talking about 425 million euros, which is a pretty hefty sum for what they're recalling senior notes due in 2034. Think of it like this. They took out a really big loan that they plan to pay back over the next decade. Now, here is a crucial detail. While Suk is the one borrowing the money, the parent company, Public Storage, is acting as the guarantor. This means if Suchi can't pay back the loan, Public Storage, the big company we all know, is on the hook to pay it. This is a common practice, but it is always important to see who is ultimately responsible for the debt. These notes come with an interest rate of 3.500% per year. So for every 100 euros they borrowed, they'll pay 3.50 euros in interest each year until the loan is due. This annual payment is scheduled for the 20th of January each year, starting in January of 2026, and the whole loan needs to be repaid by the 20th of January 2034. This debt isn't just a handshake deal. It is all laid out in a detailed legal document called an indenture. This is where all the terms and conditions are written down, kind of like the rule book for this massive loan. It specifies who owes who, how much when payments are due, and what happens under different situations. It is signed by SOC as the borrower, Public Storage as the guarantor, and a trustee, Computershare Trust Company, NA, who acts as the middleman to make sure everyone follows the rules. So, what does this mean for the notes themselves? They are direct, unsecured, and unsubordinated obligations of SOC. Direct means SOC owes the money directly. Unsecured means there is no specific asset tied to the loan as collateral that a lender could seize if SOC defaults. This is contrasted with a secured loan like a mortgage where your house is collateral. Unsubordinated means these notes rank equally with other unsecured and unsubordinated debts SUSI might have. So, if SOC were to go bankrupt, these note holders would be in the same bucket with other similar creditors, not at the front of the line or the back. Now, Public Storage, the parent company, has some flexibility here. They can choose to pay back these notes earlier than the 2034 due date. This is called redemption. If they do this, they have to pay a make-whole price. This means they either pay back the principal amount plus whatever interest would have been owed until the original maturity date, effectively compensating the lenders for not getting the full ride. However, if they decide to pay it back within 3 months of the maturity date, so around October 2033, they might be able to do so at the face value plus accrued interest, which is a pretty standard call option for lenders. There is another interesting reason Public Storage can call back these notes. If there are changes to US tax laws that would force them to pay extra money on these notes, they can redeem them. This is essentially a way to protect themselves from unexpected tax burdens that would diminish the net payment to the note holders. Again, they'd pay back the principal and any interest that is accrued up to that point. This indenture isn't just about borrowing. It also comes with rules or covenants that SOC and Public Storage have to follow. For example, they've agreed to limit how much more debt they can take on, both secured and unsecured. This is to make sure they don't over-leverage themselves, which could put the existing note holders at risk. There are also rules about merging or selling off major parts of the business. A really key covenant here is that SOC needs to keep its unencumbered assets, that is, assets not already pledged as collateral for other loans, at a level that is at least 125% of its total unsecured debt. This is a strong indicator of their financial health and their ability to meet their obligations. It means they need to have a healthy cushion of easily accessible assets relative to their unsecured debts. Now, like most legal documents, these covenants aren't ironclad. There are exceptions and qualifications, meaning there are circumstances where SOC might be able to bend or even break these rules, which is something investors always need to watch closely. And of course, there are typical events of defaults that, if they happen, could allow the trustee or note holders to demand immediate repayment of the entire loan. This whole offering was actually done under a pre-approved plan. They had filed a general shelf registration statement with the Securities and Exchange Commission, or SEC, before, on the 2nd of December 2024, allowing them to issue debt like this over time. Then they filed a specific prospectus supplement for these notes on the 26th of September 2025, giving all the important details to potential investors. This is a standard process for companies looking to raise capital efficiently. 21st supplemental indenture, dated as of the 3rd of October 2025, among Public Storage Operating Company, Public Storage and Computershare Trust Company, NA as successor to Wells Fargo Bank, National Association as trustee. And as for the paperwork, the actual legal document outlining these specific notes, the 21st supplemental indenture is filed as Exhibit 4.2 to this report. This is the nitty-gritty, the full legal text that binds Public Storage Operating Company and Public Storage to the terms of this new debt. So, what is the big picture here? Public Storage, through its subsidiary, has taken on a significant amount of debt. While this allows them to raise capital for growth or other strategic initiatives, it also means they have a new substantial financial obligation. The 3.500% interest rate is relatively low by historical standards, which is good for them in terms of borrowing costs. The covenants, especially the one about maintaining unencumbered assets, suggest they are trying to maintain a strong credit profile. But the guarantee by the parent company is a key point of risk, as Public Storage is directly on the line if so stumbles. Looking at it from a Warren Buffett perspective, companies that take on debt need to be able to service it reliably from their cash flows. Public Storage is a well-established company in a sector that tends to be relatively resilient, so the demand for storage space is likely to remain steady. The question is whether their operational cash flow can comfortably cover these new interest payments, especially given the amount of debt they already carry. The fact that they can call these notes suggests they believe they will either have excess cash or be able to refinance at better terms in the future. It is a strategic move that balances the opportunity for growth with the responsibility of managing debt. The key risk here is any significant economic downturn that could impact their tenants' ability to pay, or a spike in interest rates if they plan to refinance in the future. But for now, this debt issuance indicates a confidence in their ongoing business prospects and their ability to manage these new obligations. Alright, that is our breakdown of Public Storage, S latest debt filing. What is your take on these numbers and what they signal for the company S future? Do you think taking on more debt is a smart move or a risky gamble for them? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out. And subscribe for more deep dives into corporate filings. And don't forget to check out the Discord in the description to join the conversation. Thanks for watching, and I'll see you next time on Corporate Decoder.